Okay, get this. What if you could buy into a huge crypto project, but you could do it directly on the Nasdaq, not on some crypto exchange? Well, that is exactly what Avalanche is trying to do. And it's a massive billion-dollar plan. So let's break down how they're even attempting this.
So, the magic number at the center of all this? $1 billion. Yeah, that's a B. We are talking about over $1 billion in AVAX tokens. That is a huge amount of money, and it's basically the rocket fuel for what might be one of the wildest crypto meets Wall Street moves we have ever seen.
And that $1 billion bucks? It's all part of this super ambitious plan to get a brand new Avalanche-focused company listed on a major US stock exchange. Look, this isn't just some random press release that a crypto project puts out. No, this is a seriously strategic play to build a direct pipeline to traditional finance.
All right, so first up, let's talk about the immediate fallout from this $1 billion announcement. Because when news this big drops, it doesn't just make headlines, right? It makes waves, big ones.
And when I say waves, I mean the market reacted instantly. The second this news hit the wire, the price of AVAX just took off, spiking to an intraday high of $31.32. You better believe people were watching.
Okay, so the company at the center of all this is called Avalanche Treasury, and their mission? It's super simple, really. Step 1, get that $1 billion in AVAX. Step 2, go public. The whole goal is to create this official regulated bridge so traditional investors can easily get in on the Avalanche ecosystem.
But wait a second. How does that even work? I mean, how does a company that's basically just holding a bunch of crypto get its own ticker on the Nasdaq? It sounds kind of crazy, right? Well, let's pull back the curtain and see exactly how they're piecing this deal together. Turns out, they're not reinventing the wheel here. They're actually using a classic Wall Street move. First, they're doing what's called a SPAC merger. They're combining with a company called Mountain Lake Acquisition Corp. Then comes the hard part, step 2. They've got to get the green light from regulators and shareholders. And if, and it's a big if, all that goes well, step 3 is the grand prize, a public listing on the Nasdaq with the ticker AVSAT, hopefully by early 2026.
So who's actually running this whole show? Because this is super important. The CEO is a guy named Bart Smith, who used to be the head of crypto at Susquehanna. That's a massive firm in traditional finance. They're experts. And get this, his advisor is Emin Gün Sirer, the founder and CEO of Avalabs itself. You've got a heavyweight from old school finance and the literal founder of the crypto project. That's what you call a power couple.
And believe me, this isn't some garage startup. Just take a look at the names backing this thing. We're talking about the who's who of crypto and venture capital. Dragonfly, VanEck, Galaxy Digital, Pantera, even Kraken isn't on this. When you see a lineup like that, you know this deal has some serious street cred.
Okay, so they're going to buy $1 billion of AVAX. Then what? Are they just going to sit on it, like lock it in a digital vault and hope the price goes up? Nope. Not even close. The whole point of this company is to be an active player in the Avalanche ecosystem. In fact, the new CEO, Bart Smith, said it perfectly. He said, and I'm quoting here, they want to offer something more valuable than passive accumulation. In other words, they're not just going to sit there and hold assets. They're here to build. So, what does being active actually mean? Well, here's the game plan. They're going to make smart investments in other protocols on Avalanche. They're going to help other businesses put real-world assets on the blockchain. They're even going to launch their own validators. See, the idea is to actually generate revenue and help the network grow, not just bet on the token price.
Okay, now for the part you've been waiting for, the money. This is where it gets really interesting and a little complicated. The company is basically offering what looks like a sweet discount, but some analysts are kind of waving a yellow flag. Let's get into the details. So, here's the deal. The pitch from the company is this. They're using this special metric called MNAV, and they say that if you invest through them, you're essentially getting a 23% discount on AVAX compared to just buying it yourself. Sounds pretty great, right? But here's the other side of the coin. You've got analysts, specifically from a firm called NYDIG, saying, hey, hold on a second. That metric can be really misleading. So what you've got is a classic Wall Street situation, a really tempting offer with a pretty big question mark hanging over it.
So if you boil it all down, what's the big takeaway? It's this. Avalanche Treasury is trying to build a direct bridge to Wall Street, but the key word here is active. This isn't just a fund, it's a real operating publicly traded company that's powered by crypto and dedicated to growing an ecosystem.
And that leaves us with one massive question, right? We've all seen the ETFs that just sit there and hold Bitcoin. This is totally different. This is an actual company that's meant to get its hands dirty and build. So, is this the new way for crypto to get onto Wall Street? Could this be the playbook that every other blockchain starts to copy? Now that is the billion-dollar question.